Thank you. So my trading is common sense. That looks, when I show you the chart, it will look like, oh, this makes sense. But there's more to it because I'm a technical analyst, technical trader. So my objective is to show you the chart and see if you can learn something. And also, if you are a member of one of my service, so um, you become comfortable when you see the charts and you see the entry and you see the exit. So when I send you the alert, trade alert, that I'm buying this or that, then you can relate. You have seen the chart before, and now you're receiving the alert, and you plug in the symbol in your platform, and then you see, and you become comfortable in taking the trade. So you don't do like cherry picking. So cherry picking is only if you can avoid my loser trade. So that's great. If I do have loser, and if you can avoid it based on your knowledge, that's awesome. So all this is being recorded, and we'll send you the recording tomorrow morning. So there are two topics. One is a little topic, 5, 6 slides, and then I'll switch it to the technical analysis. I show you the charts, about 40, 50 trades. So per month, we put about, so 2 trades per day, 22 trading days. So in swing option, we put about 45 to 50 trades. So I'll show you the charts. So we live, I just want to point out something. We live in a very comfortable zone, and the breakthrough comes when we get out of the comfort zone, when we go to the edge and take the red pill, or go through the effort of learning something which is very hard. So the thing which we resist to learn. So anything which we resist to learn, that's what we need to learn. That's the area we need to focus. So that's what I want to point out to you, that anything you are resisting to learn, that's the area you need to learn. So go to the edge and start flying. So this is my favorite quote. So go to the edge, and don't live in the comfort zone. So if you're living in the comfort zone, you're not going to grow. So become uncomfortable every day and understand your limitations and what you want. So understand that. Now, also, just want to point out, I read this article and I prepared this pie chart. In trading, if we break down, there are 3 kinds of traders: the failed traders, successful traders, and the traders which are break even. So if 100 traders start their trading career, they out of 100, 70 are will lose money, so they will be wiped out. If not in 1 year, then 3 years. So 70%. So don't be one of them. Now, 18.5% will be come out break even after trading 3 years. For 3 years, they end up having a break even reserve. So that's not bad, but 3 years, the time has cost or value. So what 3 years, if you were trading full time, and you didn't make any money, then you could have made money by working somewhere. So 3 years of lost salary. So we have to consider that, and all the headaches and everything. So only 11.5% traders who start, they are successful. So you have to be in one of them. So, and to come into this pie, you have to go beyond your comfort zone. So go beyond the comfort zone. So every day when you go to bed, if you are full time, if you want to create infinite wealth, every day when you go to bed, you have to say, what did I learn? Did I learn anything? Did I make any progress? What was my focus for the day, and how many things I achieve, and what I'm going to do tomorrow? So if the answer is no, then you know you're living in the comfort zone. So go to the edge. Only then you will be on this pie, 11.5%. And trading, so responsibility versus success. So own the responsibility of the results. So don't blame the broker, the software, the guru who's sending you the trading alert. So I send out the trading alert, same alert let's say to 100 members. Out of 100 members, let's say 60, 70 make money, 20, 30, they don't make money. They quit. So people do quit and they tell me I lost money. So, so when I ask them few questions, and based on the questions, I know that what they did wrong. So even though if same trade alert, one person is making a fortune, another one is making okay good money, third person is wiping out the account. So what is going on? So there are a lot of variables. So I hope you understand the variables. Simple buy and sell doesn't make sense. So will not make you money because you will do something of your own, like risking too much or emotions. And there's so many things. Getting out or getting in is too many things. So own the responsibility. So the more responsible you are, the more success you achieve. The more success you achieve, the more responsible you become. So it goes both hands. So responsibility versus success. So the successful traders are responsible traders. And another thing is the successful traders have some kind of goal set up. So do you have a goal like daily goal, weekly goal, monthly, quarterly, yearly goal? So do you have any goal for daily, weekly, if not daily, at least weekly? If you are a swing trader, if you're a day trader, then do you have any goal for day, like $1,000 a day or $500 a day, whatever is your goal? So you need, and a lot of traders they have a very little goal. Like they say I want to make $2,000 per month. So that's if $2,000 per month is your goal, it means, yeah, like you are 70-year-old and you don't want to go to work, something like that. The $2,000 per month is the goal. So, or you have a five, and then they say, oh, I have a $2,000 goal. So what is your portfolio size? My portfolio is $5,000. Well, that's not the right goal. Or I have a goal of $2,000. What's your portfolio size? I have a $200,000. Okay, then you can put it somewhere else. Don't need to trade to make $2,000 per month out of $200,000. So it's all relative. So understand your goals, and and then maybe you can write a dream life. So have a dream life written down somewhere, like in a Word document. Start writing your dream life, and then work backward to achieve the dream life. So work backward. And another thing is. A lot of traders, they just want to, they say like this, no, she teach me the technical analysis, just get me going into scanning. I just want to know your scan and just tell me where to enter and exit. That's all I care. This is bullshit. You're talking about daily goals and responsibility and come to the edge. This is nonsense. So if you are thinking that way, know that this is not bullshit. This is so important. So goals and desires. So what are you trying to achieve? How you're running your brain every day? What's going on in your mind? Are you focusing your energy in appropriate direction? What are your desire? Whether they conflict? Your desires conflicting with your other goals. So maybe if there's a conflict going on, then you achieve zero at the end. So you go nowhere. Write down what you want from the market. So write down specific goals and develop those goals, and then laser focus on goal every day. So people don't do that. They just treat trading as a hobby, and then they just come and go, come and go. I've seen many times they just come and go. They subscribe to the newsletter, and then after 1 month they just go away, and then they come back. They get a prepaid debit card somewhere, and then they subscribe, and the subscriptions run out because there's no money in the debit card. And then for 2 weeks they don't receive alert, and then they say, okay, I didn't receive any alert. So what's happening, Noshi? So your subscription expire. Oh, my prepaid debit card. So and on the other hand, the successful trader, their subscription doesn't expire. They don't have a prepaid card. Their PayPal is linked to the proper account. They have money in the account. There's no delay. They don't want to delay even 1 day. So there's a difference between a successful trader and then an unsuccessful trader who just come and go, then come back. gather some $2,000 somewhere, and then they put the money in $2,000, and then they come, then they leave. So all this is not getting you anywhere. So if you're doing it, don't do that. So develop goal and laser focus on goal every day, and become uncomfortable. So I'm just letting you know. So another thing is, traders don't even know who they are. So this who they are is a very big topic. So consult the psychologist and figure it out who you are. So that's a very big topic, who you are. So below who you are, above you is God. You have to believe in God, so some form of a divine power. So if you don't believe, the chances of being successful is less. You may be successful, but it's less. So believe in somebody who's running your life above you, who knows all. So believe in that, and come down. So above you is God, then there are a lot of people are surrounding you on your left side, on your right side. So you can make a list of all the people who is running your life, like your mother, your father, your sister, your wife, your children, grandchildren, your neighbor, your shadow part, like you yourself, your excitement part who wants to gamble, the conservative part, the researcher part, the trader part, the creative part, the investor. Somewhere you are investor, somewhere you are trader. Sometimes you become investor, sometimes you become a trader. Who you are you a trader or investor? You can be both, but account needs to be different. You cannot mix the trader and investor into one account. Are you a gambler? Are you a conservative trader? Are you a researcher? Are you a perfectionist? So who you are. So understand who you are. Then are you intuitive trader? So intuitive, high intuition. This is some have seen they're intuitive. They know that this stock will go up. It doesn't make sense for the stock to go down. It's gonna go up, and they make fortune. But not everybody can be intuitive. Some traders, they just don't follow rules, or they hate to follow rules. There are no rules. So everything they do is a mistake if they don't have a rule. Are you a mechanical trader? If you are a mechanical trader, awesome. It's not easy to become a mechanical trader, like computerizing everything from entry to exit or managing in between. So if you are, then it's great. Now, are you a discretionary trader? So are you a discretionary trader? Discretionary trader means, okay, if you ask discretionary trader, they say, okay, how did you take this trade? They cannot explain, because they don't have a rule. They are the one who, like, here on CNBC or Facebook, sometimes they follow crypto, sometimes they follow marijuana stock, sometimes they do this and then they do that, the low little stock, penny stock. They're just everywhere. So discretionary trader don't have any rules. Now the best traders are either mechanical trader or the rule-based discretionary trader. So the trader who follow certain rules in trading, but then they apply their discretion in between. So they are the best trader out of all, and the mechanical trader. And if they are intuitive trader who make a lot of money, fortune, but it's hard to be an intuitive trader. Now they are fundamental trader, they're technical trader, they're rational trader. So who you are, so you have to understand who you are. It's hard for me to be a fundamental trader. I can never be a fundamental trader, although I was trained when I did my MBA in finance. I was trained to become a fundamental, but I did not, because of my computer background, and I just hate this writing a long report. I'm not good in writing reports. So I became a technical trader. Now, what is rational trader? So rational trader is the combination of fundamental and technical trader. So let me tell you about intuitive trader. Intuitive trader, so when you ask somebody who you are, they say, I'm intuitive trader. I have intuition. So sixth sense, I make my decision. So they are inconsistent and haphazard. They don't have any written game plan. They make money one day, lose money one day. But to remember that some intuitive trader, they are very successful. They make a lot of money. So when they are putting the trade on, nobody is looking at that setup. They may have to sit quiet for a few months, and then the trade explode in their direction where they were expecting. So not many people have that stomach to just sit and let the trade work out. And I give you example, Boeing. So just, if you were long in Boeing and sit out for last 2 3 months, you know 125, now it's near 200. So that kind of trader. So fundamental. So what's the difference between technical? So I'm sure you know all this, but I'm just letting you know fundamental analysis, late in entry and exit. So it's my belief. So these are my beliefs. Also, when you're following somebody's newsletter, you have to agree with that person's belief. So that's what I will show you through my charts. That's what my belief. And if you agree on with my belief, that's where you will make a lot of money. If you don't believe in what I believe, because when I'm sending out the alert, I'm believing something. So if you don't believe in that, you will hesitate and not make money because you don't believe in, you don't see it. So my belief is that fundamental analysis is late in entry and exit. So especially exit. So they enter early. They can enter early because they believe in fundamentals, and they enter early, and not many people can afford to stay in the trade in the very beginning and just sit out. And they're definitely they are late in exit. So because they don't believe the fundamentals, something is wrong, they just sit and market just tank, that stock or market tanks. So it requires long commitment, whereas technical analysis keeps us disciplined. So if you rigidly follow technical analysis, then you need to enter and you need to exit. And you can trade in isolation. You don't need reports. But if you have access to the report, the fundamentals analysis, is good. So let me read some questions. Can see? No, nobody can see. It's me only can see your comment. Somebody left a phone number. I have no idea why they left the phone number. Okay. So technical analysts are price takers versus price makers. So they believe in the value. They believe in price action and they believe in volume, and then they just go with it. So technical analysts are like that. They understand supply and demand. So where is supply and where is the demand? So they go in long when they see the market is in the demand area. They exit when they see the market is in supply area. So understanding supply area and demand area is key to success. So now, what is rational analysis? So rational analysts combine the fundamental and technical analysis, and then they take the trade. So for example, I give you is a Boeing, let's say. So if Boeing is trading at 125.50 and you believe in its fundamental, and the technical analyst is telling you that it's time to go long, then you will go long because you believe in fundamental, and then you're timing your entry based on technical. So you become a rational analyst. And it's better to be a rational analyst than to be a fundamental or technical. So if you have fundamental knowledge, common sense, street smart, you can make a lot of money. Okay, so be a street smart trader. So this is very important. Have some common sense. You don't need a degree to make a lot of money in trading. You just need to have some common sense and be street smart. Oh, so this topic is finished. Let me start the chart. So I show you some charts of the stocks of the trade which I took in the month of May and June. So that's what I'm showing you. And I will explain my logic, the common sense logic. So here is the Adobe chart. So so here's Adobe chart. So we went long on Adobe, I think on 28th May. So you see the date here. So on 28th May, so all these charts are in alphabetical order. So I start with ADBE, and the last one will be Z chart. So so the dates are not in order. The alphabets are in order. So this is Adobe. So I saw Adobe. So on 28th of May, I must have seen not only Adobe, but I must have seen the NASDAQ was going up, or it was rebounding from the support, or the market in general was going up. So all this play a role behind the scene, not just Adobe that I see the chart and take Adobe, but look at the Adobe chart. So you see this hammer. So this hammer is very powerful. It's hammering out the base. So when a hammer is formed, it tells us that there are buyers here. And if I look back, I see here that, okay, this is where it tanked before. This is the area where Adobe tanked. So this hammer is forming. This hammer may be a hanging man. So there's a difference between hammer and hanging man. It depends where it formed. So like this one is a hammer. So you see this candle, this is a hammer. This one, it looks like a hammer. It can be a hammer, it can be a hanging man. It depends what it does next day. So I waited for next day. When I saw the next day move above, then I know, okay, this area, that it really bounced, and this is a support. So it's worth taking going long. So we went long around 379 via calls. And then what happened? You see, went up for 3 days, 4 days. So exited on this red day because it has like a triple top resistance from here, resistance from here. So it's all good. Enter at 379, exit at 390, 11-point move. 11-point move gave us 27% gain in Adobe, and that's all we care because we are a swing trader. So that's one entry. That's the logic. Here's another logic for AMD. So look at this candle, AMD. So what is doing? It gapped up. First of all, it gapped up a little bit, or it started at the same price level. So it didn't gap up. It started from the same price level where it closed the day before. But then look at the power of the candle. It's open and just kept going, open and just kept going. It's, it opened, the low and open is the same. The close and the high is the same. So this is a powerful setup. So we went long on AMD, knowing that, okay, this gap is filled. It started at the open price and it never went back even a penny. So, and there is a 50-day moving average. So all this support that is time to go long. That's like a Genie way of trading. And then what happened? After 2 days, we exited. So we didn't make much money, 15.69%. Now you may ask, well, only 15.6.9%. So maybe on 6th of May, maybe the market was not good. Maybe the market was hitting resistance. So it's better to close the position. Maybe we had many other positions open and we closed them as a basket. So we closed other 5 positions and then we closed AMD also. So maybe 6th of May, I don't know, maybe it was Friday. So, there are many reasons why we closed. So we closed at 15.69% gain. Now here is ANF. So the ANF was going up on what day? On 5th of June. So ANF was going up on 5th of June. Probably 5th of June is correct date. No, it's we did not enter on 5th of June. The chart was prepared on 5th of June. So whatever is this date, maybe early June, 2nd June or 3rd June was this date. So we saw ANF holding the support around 11-12. So we went long. And another reason why, so there may be some other retailers were going up. So when I flip the charts and looking at the which setup is there, so I say, oh, okay, the retailers are going up. So why not? Which one is better? Is it JWN? Is it Macy? Is it ANF? Is what? Which one? So it looks like ANF is the better one. So out of all those 4, 5, 6 in my basket, I chose ANF. Looked like there's a support here, right there, and went long. And what happened? Moved up. And when it hit 200-day moving average, it's like a resistance. 200-day moving average when you're moving from below. Exit. What? How much gain? 32% gain. So not bad for 3-4 days of hold, 32% gain. Now here's another one, AXP. So look at AXP chart. So what happened on AXP? Maybe on that day, financials were moving up. There must be some good news. So looking at AXP, looking at CS, GS, DFS, Visa, Master, who knows? The 5, 6 financial stocks, all related, same category. Maybe XQ, maybe PayPal. So everything is looking good. They are moving up, bouncing from the 50-day moving average. Get in and get out right here at this resistance level. You see the long wick resistance here, resistance here. So 89 If you get out at 95, 6-point move, and then 6-point move in option translate to 23% gain. Not bad. So we entered at this level, exited right here when it gapped up. So when the stock gap up and put on a tiny candle, that's and then when we look back on the left side, we see the resistance gap up, have 23% gain. It's time to ring the register. So ring the register. Here's the Baba call. So now Baba found support at 50-day moving average and moving up. So now we say, okay, Chinese stocks. So what's going on? Why Chinese stocks? So if Chinese stocks, there's a bad news on TV that they're getting delisted and all that, and even then, Baba is moving up. So what is the problem with Baba? Why it's moving up? I don't know. I see the gap fill and I go long, and I will at 212, and I will exit right here at 220. So that's all I know, that it bounced from the moving average. There's a support here, and it's moving up. It filled the gap, and there's a negative news for the Chinese stocks, and it's moving up. So negative news is moving up. Why? I don't know. I entered here. Here you go. So hit the resistance 219, took 26% gain after 2 days. So not bad. Here is CTSH. So CTSH was going down. Maybe the market was down that day on 12th of May. So if you look back, so you have to look back what was the market condition. So if you're evaluating, if you are evaluating the trade, you have to see the market condition also. So maybe on 12th of May, the market condition was not good. It was going down. So flip the chart, see what can we trade for, puts. So saw CTSH breaking support. So what are the chances that it's breaking support? It can fall to this 50-day moving average. So like 2-point down, maybe next day, and we buy puts. So we bought put, and look what happened. You see. So when we enter, the candle was like this. By the time the day was over, it was already here. So we were already in profit by the time it closed. So then we waited for next day. Next day, it gapped down and just continued breaking down below the 50-day moving average. So locked in 54% gain. I mean, it can come down here, fill the gap, but who cares? 54% gain next day. And that's so we have to define who we are. Are we a swing trader or we are an investor? So we're not investor in that account, in this service. So we are not investor in this service. We are a swing trader. So we take 54% gain. Next one, Delta Airline. So airlines are all beaten up. Nobody's flying. Planes are grounded, and everything is coming to hell. And Warren Buffett exited, but we traded Dow puts, and we also traded Dow call. So look at this, gapped up 50-day above 50-day moving average. And other airline, if you look at other airline, okay, other airlines are also going up. AAL is up, JBLU is up, and Spirit is up, and other airline 4-5 which I watched, they are all up. So which one is good? Maybe this one looks good, better than all the others, but gapped up about 50-day moving average. Where it's going, I don't know. Maybe it will go here 42.50. This is where it can go in short term. Maybe after 1 year it will make a new high. Who knows? Right now I'm here. Look at the volume. The volume is huge too, gapping up above 50-day moving average. Okay, let's go long. So went long. Look what happened. 45% gain right there, right? So now once you exit the trade, don't ignore it. Just keep it in front of you. Maybe it will give you another entry. So maybe you're missing out the big move, and I did miss out big move, but I entered again. So look at here. So pull back. You see, enter here, exit here, pull back. So pull back. So what happened? Pull back. So pullback happened, and this is the area of support. Based on technical analysis, this is the area of support. It pulled back, and it just, if you look at it, it wants to go up. It pulled back. It didn't break below this, it didn't break the 50-day moving average. It's rising again. So what are the chances that it will go up? I think it will go up. And this is what happened. Look, it went up more. So 77% gain. So gapped up, we locked up again. Look on the left side. So this was the resistance area. So I look on the left side. So when I look on the left side and say, okay, this is the resistance where it gapped down. I have 77% gain after 2 days. I better lock my profits, lock my profit. Now here's the Doku. So what's happening to Doku? Again, another looks like a hammer candle. It's like a hanging man. It's not a hammer, it's hanging man. And then what happened? Next day it moved up above. So entry for me. This is what I teach. So this is the entry for me. So I went long, I sent the alert, and then 31% gain next day. But simply because this candle tells me that okay, the Doku may move up instead of going down. And where it will move up, it will move up to the resistance area. This is the resistance where it fell. So if it goes here, 4-point move will give me 30% gain. So 4-point move, 31% gain in option is not bad. Here is HC. So when I closed Doku and HC, there was a market condition. I believe we closed on the same day, probably. Yeah, we closed on the same day, Doku and HC, and we opened on the same day. So HC is the same kind of formation. You see, it came down to this support area. This is the support at 70, and it was moving up. I caught late. So this is late entry. The entry should have been right at the beginning, but I caught it late. And then I say, okay, 79.80 is the entry point. If it goes towards 85, I just exit. So exited even before maybe who knows on 29 May what was happening in the market. So exited at 20% gain. Here's FSLR. So the solar stock was moving up. Look at this one. It bounced above the 50-day moving average and was sitting here. So what are the chances that it bounces above the 50-day moving average? It will break the 50-day moving average and it start tanking. Chances are it will go up towards the 200-day moving average. So, it's simple trading at 43, 53% gain. You see, moved up. So it can go to, I don't know where it is. It can go to 50-day moving average, or it doesn't. The stock don't go up straight in lines. And if you're trading a stock, it's okay to hold. But if you're trading options and the gain comes in 2-3 days, 53%, you need to take your profit. Otherwise, this 53% gain become 10% gain, and then 10% gain become 40% loss, and then it can become 100% loss. So 53% gain after 2-3 days is good. Take it. Here's GD call. So now what's the logic of GD? So when GD appeared, there must be some defense stock going up. So have a basket of defense stock. Okay, it's going up. Looks good to me. It was holding the 50-day moving average and it gapped up. So I would take it, and I see other defense stock, they are going up. And where would I exit? When it fills the gap, I will exit. So we entered around 137.73. And look where we are. When the gap got closed and hit the resistance, we closed this call trade, made 114% in 5 days. Not bad. Here's another one, GIS. So GIS moving up. So why would I go and call along in GIS? What is the logic? So when I look at the chart, I say, okay, it's a 3-day of sideways move, and then it's putting on the very strong, the strongest of all the candle where open and low is same, and the high and close the same. So this looks like very strong move. So enter at 60.82 and exit at 64, 48% gain. Look at this one here, and then boom, 48% gain. Not bad. Here's GS call. So now GS, why enter GS? So enter GS at 183. Maybe some other financial stocks were moving up. So like JPM and C and related to especially JPM. So okay, so if JPM moving up, let's see what else looks good. So based on JPM, did not enter JPM. Let's look at GS. So GS looks like it has a support right here. It's what are the chances of GS to tank? Maybe it will tank, but I'll go long. Look what happened. It did pull back to the 50-day moving average. So you see, we entered here. It did pull back to 50-day moving average and rocketed upward towards one. I don't know, maybe it's higher. 87% gain in what? How many days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So 11 days, 87% gain. So here was the entry, exit right here. Magic. Look at the volume. You see the volume, big. Now another one, JPO. So JPM, yeah. So we trade JPM too. So C, AXP, MA, JPM, GS. These are the 5 stocks. Just keep repeating. Sometimes buy this one, sell this one, then buy that one, sell that one. Just keep rotating whatever is moving. So look at JPM. So this is the entry signal. This white candle. This is the entry signal. Went up, took the red candles, and then moved up. So I missed this move. So missed this move. It's okay. When you miss the move, then don't say, okay, I missed the move. So what's the point? So I will not. It's like you're getting mad at the stock, and the stock has nothing to do with your madness. It doesn't care. If it wants to go up, it will go up. So are those absolute gain or annualized? These are absolute gain. They are not annualized. And I'm not talking about annualized. Annualized could be like 10,000%. These are 2 days, 3 days, 4 days gains. So they are not annualized. I'm not talking about annualized. I'm talking about the individual trade and 2 or 3 days. Yeah, I know people don't believe what kind of gains I have. So that's why I'm showing you the chart so you can take advantage. So look at this one, JPM. So this is the entry. I mean, this was the entry, but I didn't take it. So if I don't take it, it doesn't mean that, okay, I miss it. I just watch it and see what it's doing. So I saw, okay, 50-day moving average. It looks like it's want to go up. Here are some support here too. What are the chances for JPM to go up or to go down? So I take my chances at 90. I bought the call next day, not next day, after 3 days, gapped up. So probably same day as GS. So look at this, what happened. We entered here. It just moved on sideways for 4 days, moved sideways for 4 days. And then look at the volume. Look at this volume and then gapped up. So not bad, 21% gain after 4 days. Here is low. Is that a low? Yeah. Okay, we didn't make much money in low. So now there is nothing to see here to the naked eye, unless you're seeing what's happening. Here's the low. So it filled the gap. So it gapped down and filled the gap. So gap down, fill the gap, and put on a tiny candle, not a big one. If it gapped down, I think it gapped down because of Home Depot earning. So Home Depot came with a bad earning, probably. So Home Depot and low, they go together. So Home Depot came with a bad earning, and maybe it has an effect on low, and it gapped down and it filled the gap, and it didn't go much lower. If it's really bad and gap down, then must just crash. It just sat there, and then next door what happened? Went up, not bad, 18% gain. It was not much, but 18% gain. Here is LVS, the casino is the stock. So nobody is going to casino and all that. It's everything closed. So it tanked to 34, 35, and it's sitting at 52. And suddenly the casino starts moving up. So if you look at WIN, so out of casino, MGM, WIN, BYD, LVS, so it looks like this one is about to take off, and chances are it will break the resistance. Here is the resistance level. So it's having a tough time in breaking the resistance. But what are the odds of opening at the high and gapping up and then keep going up? So I'll take my chance. And then this is what happened. Next day we closed for 23% gain. Here is Lyft. So Lyft trade, Uber announced that it's laying off 15 or 20% of its workforce. So it's bad. So Uber is already tanking, and then what happened? Lyft had an effect. And when I look on the 1st May, maybe the market was tanking also. So you have to see what market doing. So on 1st of May, the market bad, Uber laying off 20% of its workforce. maybe, and the lift gap down. So what are the chances of lift going down? Maybe the chances are, next day it goes down, went down, made 45% gain. So entered here on a gap down based on Uber news, not on based on Lyft news, but based on Uber, trade lift, gap down, next day, get out, 45% gain. Here's Monster Beverage. So Monster Beverage going up. Here based on technical analysis, here's the signal on this tiny candle. Here's the signal, and then it's moving up, big, strong candle. So what are the chances of Monster to go up then to go down? Here's a strong support at 58, between 58, 59. Here's a strong support. Went up to 62.45. We exited. I think we exited very early. It went up crazy, more. So some traders, I believe they were holding because sometimes the alert, people miss the alert, like sell alert. They busy doing something, and then they come back and they say, oh, are we not taking profit in Monster? It's trading at 68. So when I say, yeah, we already took it, but if you were holding it and it's a 68, you take your profit. So say thank you. They say thank you. Okay, great, because they missed the alert when I sent it at 62. And they're holding it and it's a 68. So it's more profit. So here's QQQ. So now QQQ looks like it's going down. So at 2.9, it looks like going down. So this is a support. It from here where it crashed before, it crashed from 219, you see here, but it was holding. We went long, and this is what happened to QQQ. We made, I think, $600 per contract, 37% gain, $600 per contract. We exited QQQ. This is index option service, so this is a different service. Roku, we trade Roku. So look at the Roku chart. So it's holding the 200-day moving average. Roku is holding the 200-day moving average. It broke, then it came back, moved up, then gap down. So anytime the stock gaps down and move up at the support, which is in this case 200-day moving average, is saying I want to go up. That's what it's telling you. I want to go up, and where I want to go up, maybe I will go up to this level, 150 level. Why? Because this is where I fell before. So keep an eye on 150. 150 for me is very dangerous. So keep an eye on 150 for me. You can go long because I'm bouncing from 200-day moving average. Look at me, I below and now I'm up. So go long. And what happened? It did go up. We took 34% gain. Sometimes the gains look like 34%, but in terms of dollar, it's big, like $400, $500 per contract, because it's relative. Sometimes the dollar gain is too huge. So exited a 34% gain. Here is SQ. So we trade SQ and PayPal. So sometimes we trade PayPal, sometimes we trade Square, Visa, MasterCard. So American Express. So Visa, MasterCard, American Express, Square, PayPal, they go together. So just keep an eye which one is moving. This was a very late entry. This was a dangerous entry, so for sure, because I don't trade like that. I don't buy at the high, or I don't do that, but I did. So this was a dangerous entry. This is not the way I trade. And if you look on the left side, there's a resistance, but market was, I think there was some positive news from PayPal or something was happening. So I said, okay, I'll take my chances. So went long on 82, and then what happened? You see, it fell, it pulled back. So it pulled back. So this entry was, remember, this entry was dangerous, but I was expecting break above, and after 4 days, pulled back and then went up. So we locked in 30% gain, so not bad. This is the kind of trade I take from the bottom. So WFC. So WFC is a Wells Fargo, another bank. So sometimes WFC is moving, sometimes Citibank moving, sometimes JPM moving. So all these banks, one of them are moving up and down. So you see here, this is the entry. This candle is the ultimate signal long. and I missed it. What happened? Gapped up, went down for 4 days on the sideway, and then gapped up again. So one gap, then another gap. So this was my entry for long. And on another gap, we closed it for 43% gain. So not bad. Close it at 43% gain after uh, next day. All alerts are sent via email and SMS. If you have a phone number, you can provide all alerts are sent via email. So now, next one. So work. So work, we watch work. Work goes up, work goes down. So last Friday, I think it was tanking due to earning gap down. So here, so when the stock gap down, then I put it on my watch list and I say, okay, it gap down, it went down like 14, 15%. Eventually it will start moving. And when it starts moving, then we will time the entry and go long. So work is on the watch list to go long. So now on 20 May, we went long based on this support right here. This candle, it showed there's the support here, and then it gapped up. So when it gapped up, here is the support. It's gapping up. Go long. We went long. Whoa, 112% gain. So you see, this tiny candle gave the signal after and the gap up, go long, and then it just kept going and going and going. So when the stock kept going and going and going, and the earning come, then it tanked big time. So I don't know where it is, 15% down, maybe it's here somewhere on 200-day moving average or 50 days, somewhere it's here. So it's okay. So starting next week, I'll start watching it and time my entry and go long. Here's Yelp. So Yelp, also we trade Yelp. So Yelp, Facebook, what else? Facebook, Yelp, Baidu. So all this, they go together. So Yelp, this is the ultimate entry. This was a signal. This candle, these two candles are telling us it's support here at 18. So they're buying it, and then it gapped up. So I still went long above 50-day moving average and sold quickly after 3-4 days, sold quickly along with other trades. So you see 22% gain, but there are other trades open. So one is making 30%, another one making 100%, another one 15%, this one 22%. So you just sell closely. Maybe 27 May was Friday, so sell for 22% gain. Here's Z. I think this is the last one, Z. So Zillow is moving up. People are coming in to buy homes and all that after COVID. They're coming back to the market, and Z is just moving up. We'll go maybe make a new high. So we entered at 54, and then it pulled back for 2 days. So very bad, right? This black, white, red candle, and then gap down. So this gap down at 45, and then bounce back up. We bought more when it was moving up. So we added more. It looks like 16% gain, 16% gain from the entry. But if you bought more, when I send the alert, buy more in between here, this 16% gain become 50% gain because you're buying at a lower price when I'm sending alert to buy more. So if you have a buying power, you can buy more and add average down. So we do average down. It's not like the philosophy that don't average down or lose a trade. So average down on the move up. So I was wrong here, but I became right after 2 days, and it started to move. And then on the gap up, exited. So 16% gain on from the entry point. So we have a swing option service. Swing option service is the idea is to trade for 1 to 5 days, 6 days, 7 days, whatever. If the target is hit, we enter or the profit objective. You can take if you're not a member, you can take a trial for 1 week for $17, and then it's $167 per month. We have a basket of 500. So the way I trade is I have a basket of 500 stock, almost 500. So I divide it into two baskets. I call it one as a core and another one as a non-core. So core stocks have about 250 stocks, and the non-core have like 250. So core stocks are the main one, like Baba, Baidu, the charts you saw. And on the non-core, I call it non-core, they are additional stocks. So sometimes when I don't see any opportunity, like the stocks are overbought, too much extended, and I'm not finding anything on my main basket of 250 stocks, then I switch it and I start looking for from the non-core. So there are other 250 stocks. I look at it, maybe I can find something. So most of the time there is a trade, one trade per day going on, maybe sometime two, three. It depends how many trades we have open. Depends on the market condition. It depends how many trades we are closing. All that goes into the background. So on average, you can say 8 trade in the swing service, 8 trades. So if you have a 15,000 and above portfolio, then it's good. Then you can take almost all the trades. Ideally, if you have 25,000 and more, then it's even better. So one of the criteria for being successful in trading is having a bigger size account, like 50,000 and more. So you have a portfolio, bigger size, you have time, and you have a skill. When you combine, then if success is there. When the skill is missing, or time is not there, or have not capitalized properly, the success is hard because you're just it's not there. You cannot. So profit objective is 40 to 100%. As you see, a lot of trades we make more than 100%, and some trades we do make less than 40%. So a specific buy price is provided. So when I'm trading, when the alert is generated, it's all handpicked. So I go through, scroll through the charts. So imagine me during the day, 250 symbols, I go through one by one. So I scroll one by one and I eyeball it because I've seen 10,000 times before. I see it 10,000 one time. So when I see the trade set up 10,000 one time, I recognize it. So when I recognize it, I start stalking it. So I stalk it and to see, what it's doing. And when the stalking step is over, I go into the detail mode and I start stalking. And if it looks good, I look at the lower time frame. So I start out with the day time frame. I see it on the day, I see on the weekly, then I go on the hourly and 15 minutes. And when I see, okay, yeah, there is a opportunity and the market is have the potential to move up, and then options. So we trade options. So if the stock is there, okay, we buy the stock. So I do have a stock service for 67 per month. You can, if you are a trader of stock, you can trade, but don't trade stock service if you have $5,000 in your account. Need to have bigger size account to trade stock. Otherwise, you're buying 10 shares and paying commission and paying to me, you will not make money. So have a bigger size account to trade stock. So we do send out the stock alert. It's only 67. When there is no option available, and the stock looks good, I still send out the alert, but it's only to the stock service. So when the stock is set up, it looks good, then I have to look at the option chain. Sometimes the spread is huge or the bid and ask is like crazy, or there is no volume, there is no open interest. So that one is ignored. So must have some decent spread. I don't mind if there is no volume, because volume is okay. I'm looking at the chart. I'm not trading I'm not looking at the option chart. I'm looking at the stock and I expect the stock to move. So when the stock will move, the option will move. The spread is okay, whatever is depending on the stock. Sometimes the spread is crazy and it become more crazier, like in February and March. So a specific buy, I send out the alert to buy this stock option this month, this is strike, and for this price. And then I monitor the fill. So I'm monitoring my fill for my members real time, and I see that. And if there's any adjustment required, I send out the adjustment. And after that, I send out the target. So a specific target is given to you. And then during the progress of the trade, then I send out the updates. This is happening, and take the profit. But the target is provided in advance, and you can set the target in advance. And all trade alerts are sent via email and SMS. So if you have a phone number and carrier, you can give us, and we can send you alert through SMS. But if you can monitor your email through your phone, that's enough. You don't need SMS, because we have a dedicated server just for trading, sending the trade alert. So we have many alternate ways of sending alert and dedicated server just to send you the alert. So there's another service I have partnered with. It's called Asset Protection. If you're interested in asset protection or identity protection, if you're interested, just send me email saying I'm interested, and then we will go from there. So it's related to assets protection, legal advice, and identity protection. So Now, what you will do, so you will tomorrow probably you will receive an email with the $17 link. So if you are a member, already swing option member, so this offer is not valid. So if you receive an email with the $17 offer, just click on it and sign up for 1 week, starting tomorrow morning. And you will receive also 82-page guidebook. So I've written a guidebook. It's a PDF format. You will receive it and you read it, and it will better equip you to trade my alerts. All right. So today we covered rational versus technical analysis, and I went through responsibility versus success and the goals and desires, etc. And I showed you some charts. So after 2 weeks or 3 weeks, I'll show you more winners. If you don't join, all you have to do is look at what you miss. So if you don't join, just come after 2-3 weeks and see I brag about my 40-50 winners after 2-3 weeks and so on. And I'll cover another topic besides showing you the winners. Discuss a short topic after 2 weeks. All right. If you have any question, please send me email. Do you have a losing week, month? Yeah, we do have a loser. And the recommendation, I trade from TradeStation. You can trade from Ninja. You can trade from Interactive Broker. Think of something. It's all up to you. So I don't recommend any broker. So it's up to you. You can trade whatever, as long as the broker doesn't charge you arm and leg for your commission. Most of the brokers these days are charging you free commission. So the broker also depend, the broker thing depend on you, what you're trying to achieve. So they have app, they have charting facility, they offer lower commission or no commission. How they open account, some broker don't open an account, entertain you if you don't have $10,000. So if you don't have a $10,000, they don't open. So it means they give you free commission, but they can open your account with $2,000, but you will lose money with $2,000. So got in 1 week for $17, made enough to pay for the next month using an old account with just $535. Okay, so somebody is saying 530. They open an account with $530. So $530, $35. So imagine this $535. You have to be super lucky to make money from $535 because you open a trial $17, and after $17 you will pay me $167. So I'll take $167, and then you will pay the broker also for your options contract. So if you have a $535 account, how much are you going to make? So you have to be super lucky, like 535 become $1,000, and 1,000 become 15, and 2,000 and 3,000. It just keeps going. And eventually you will bypass your account because you get into a bad habit of putting all the money. So it's not good, but good for you, David. So, all right. So if you have any question, please send me email and I will respond. Otherwise, look for the $17 offer. All right. So thank you. Bye. Bye, PL. Bye.